Hey, this is Sagar Khandelwal. Welcome to the professional class for startup. Today we are going to discuss about best form of organization structures for new businesses. This is for the startups. What are the major types of business organizations? One is the sole proprietorship, second is partnership firms, third is limited liability partnerships, and fourth is limited liability company. Sole proprietorships. Everyone knows that one thing which you can start immediately is sole proprietorship. It is a hassle-free business startup wherein you do not have to do much. If you see that the ownership is with only one person, the control and decision are done by only one person, that is you yourself. Legal form is that the legal entity is not different from the owner, so that means whatever is the owner is the legal is the business. Risk and liability is the most important part which you should consider when you're starting with a sole proprietorship, because sole proprietorship, the risk is unlimited, the liabilities are unlimited. If you run a sole proprietorship and if there is a loss in the business, your personal assets may get attached in the event that the payment have to be made to the creditors. Legal compliances are limited. You only need to file few returns. If there is a business specific compliances, you really need to follow that as well. But otherwise, it's only one income tax return which gets filed in a year. Yes, succession is not perpetual. If there is something which happens to the owners, the business stops. Second is partnership firms. The partnership firms is between one, two or more individuals. The firm's liability is unlimited because it is run by partners, and the profit and losses are shared equally. So all of the partners gets attached to losses if there is any. I'm so sorry. All the partners' property gets attached in case if there is losses and the payments have to be made to the creditors. The legal form is no different from the partners. That means the partners and the partnership firms are one and the same. Profit sharing is in the ratio in which the partner decides upon and writes it down. Risk liability, as I've already said, that is unlimited. Legal compliances are limited. Yes, in that case, if you see the major compliances which needs to be done is only income tax return and the local compliances with regards to Shop Act establishment. Next is limited liability partnership. This is more of an evolved form of organization wherein the partnership firm has been upgraded with one more concept called as limited liability. So if you have seen in the earlier slide that the partnership firms are unlimited liability, but with the limited liability partnership, it is limited liability. What it means for you is, in case if there is any business loss or the business have to be shut down because of the losses, the creditors only have to be paid out of the assets of the partnership firm and not the personal assets of the partners. Yes, unless there is a fraud. So this is the rider. If there is no fraud, there is no attachment of property, and your property is safe, the business can be done in a way much smoother way. In terms of profit sharing, is the form of organization allows you to have your own arrangement of profit sharing between the partners. Risk and liability, I've said, is limited. Succession, yes. The partnership, limited liability partnerships can run with an unlimited succession if there is mentioned in the partnership deed. The funding arrangement for limited liability partnership is much better than the other forms of organization we have discussed. The other forms normally do not get funded by the VCs or the investors. Limited liability partnership, yes, people may consider doing it because there is some regulatory authority which guides this whole thing, and the returns are to be filed with the register of companies any which way. So hence, it is far more better form of organization. Last but not the least, limited liability company. This is the most famous form of organization, and this is the most famous way, most convenient way to do a startup, because this is more established in law, right? The company's law has been in existence in India for more than 100 years. The organization structures are very straightforward. The compliance nitty-gritties are very clear, and it is more sorted, or any kind of investor or any kind of funding which has to happen is easier in limited liability companies. We'll just quickly discuss exactly what it means. Ownership is by way of shareholding, and that means that shareholders and the companies are two different entities. The control is through the shareholders, but the directors run the show. The directors are the one who takes care of the day-to-day affairs of the company. The legal form of organization is that it is different from the members. So members and companies are two different entities. That means there can be a contract done between the members and the companies as well. You should definitely read out to Solomon and Company case, which is a very famous landmark case. Profit sharing is in the form of dividend. So whosoever declares the dividend Risk and liability is limited, yes. Succession is automatic and unlimited, and funding options are unlimited.